I'm Jez San, the founder, one of the founders of Funfair. We're a gaming technology company running on the Ethereum blockchain using smart contracts to power the gaming. I'm joined by my esteemed panel, and the title of our panel session has something to do with hype, so we're going to try and highlight that somehow. Please.
My name is Alexander Kochanowski. I got 17 years of experience in the esports market. I built Navi, that's one of the most popular and one of the most successful esports team on the planet. And in 2016, I became a shareholder of US Force. That's the third biggest esports entity on the planet with more than $100 million of investment in last round. Currently, I'm working on Dream Team. I presented on the stage today. That's infrastructure platform and payment gateway for esports and competitive gaming. And we are doing ICO.
My name is Yeo Lui Soleil. Lui Soleil is actually a Chinese name. I came from PE and a VC background. I actually never even invested in any single ICO until now. And we're running our own security tokenized fund. We invest in blockchain companies. So far, I have invested in 7 companies in equities. I get the tokens for free. But just last week, we just signed the first deal, a US regulated exchange. We're going to invest in their equity and tokens. Because I really don't know how to invest in tokens, I don't feel comfortable. And I decided to take all the offers, $33 million this way. Probably we don't have a hyped market. But today we're talking about hyped market, right? Okay.
Hi, I'm William from Gatecoin. So I'm the CEO of Gatecoin. Gatecoin is a cryptocurrency exchange based in Hong Kong. We are also a money service operator licensed in Hong Kong. We enable people to buy and sell cryptocurrencies like Bitcoin, Bitcoin Cash, Litecoin, Ethereum, and 30 other cryptocurrency tokens with HKD, USD, and Euro. So we also develop some ICO-related services to enable project founders to raise funds through this process.
All right. My name is Frank Schel. I'm the co-founder and CEO of Savello. We are a Bitcoin broker in Europe. We've been around since 2013, alumni of the Barclays Accelerator, backed by the Digital Currency Group and some of the leading angels in the space. I'm also the founder of Rhino Ventures, investment firm through which I've invested in numerous ICOs and traded in crypto as well.
Thank you, everyone. So one of the problems we have in the token economy is that hype seems to play quite a big part in promoting the token, especially prior to the token sale. And actually, Yale, your partner, John McAfee, or co-founder, seems to be quite responsible for a lot of the hype with his shitcoin of the week or whatever that he promotes. How do you feel about that?
That's part of the industry. That's part of the hype, and which I actually don't understand anything about it.
Okay, I mean, but it might be counterproductive to have such a self-promoter and loose cannon involved in your business, because probably your business is not about hype, but he is doing a lot of hype.
That is why I actually believe there is a strong need for the balance of regulation and innovation. So we strive to be regulated. So our security token we are going to offer is going to, we're seeking various jurisdictions to be regulated and licensed. Yeah.
Thank you. So what do the rest of the panel think about how important the role of hype plays in the token economy?
I think like the general right now people are trying it's basically the second option to raising up the money. Yeah, not going to VC fund or investments, whatever, sharing the equity. People right now trying to like raise the money using the tokenizing everything from people, from other people to send to everything. Yeah, you can find the tokens for like people can even build the space station on Saturn. Yeah, you can find an ICO like that. And I think there will be a few projects that are really good, that they will bring a lot of to economy. Yeah? They really need the blockchain and smart contracts, and they will disrupt their respective industries. But I think in general, the fail rate is pretty much the same as in any kind of venture investment. Even it might be even higher.
To some extent, people haven't failed yet. It's too premature. I mean, but if you look back at the internet boom and bust, 99% of the companies didn't survive, but of the 1% that did, we got some amazing companies, and hopefully it is the same in the token economy. William, what do you think about that?
So yes, there is a lot of hype around ICOs, and indeed, I think that 99% of the projects will fail in the future. That being said, basically ICOs remain a great way for project founders to raise funds and to create an active community around their product, around their project. So then I think it's going to be very important to regulate this market. It's going to be very important also to educate potential investors, because at the moment, basically, the potential investors or retail investors are not necessarily used to invest in projects, be angel investors in startups and so on. So basically, they just see the high rewards, and they don't see and they don't necessarily understand the risks associated with investing in a project at such an early stage. So it's going to be very challenging to educate investors and to regulate the ICOs.
I think the education part is easy. Once the bubble burst, they lost a lot of money. That's the education, and it's coming.
It would be nice to do it before.
Yeah, it's a little bit late by then if we only find out after it's burst. What do we think about the requirement for hype? What do we think? You know, the SEC just chastised. I think they didn't mention their name, but it was obviously the Long Island iced tea company that changed its name to Long Blockchain and then doubled in price overnight on the stock market. And they chastised companies that just put the word blockchain in their name and suddenly cash in on the hype. So what do you think about that?
I think it's amazing. There was also this project where people literally said it's a scam project. Don't send your money here, when they still raise a couple of $100,000. So I mean, it's a reflection of the breakthrough of the technology, and it opens up this whole market where previously it was controlled by venture capitalists that are now being disenfranchised by just a retail investor. And it's interesting from both sides. You know, it's interesting for the startup that normally have their equity locked up for a decade before they get an exit. And it's also interesting for the investors that just have this quick ROI where they can deploy some capital, get an ROI once it goes liquid, and they can keep part of the funds to stay on. So that is the fundamental model that is driving this. And you know, obviously people get rich on, they were already getting rich on Dogecoin before ICOs were a big thing. Now they're getting rich on ICOs, and we're going to see this natural deflation when the bubble ultimately bursts, and you know, people are going to look deeper. The investment models are getting more sophisticated. There are will groups that are looking at how are we evaluating these deals, and they will weed out the bad ones ultimately, but it might take some time.
But the problem with this bubble is that you can only go long. There's no ability to short most things, so they're more or less upwards only prices, and there's no independent analysis of the actual tokens, so no one's reading good research, and no one's independently reporting on these things. There's no independent websites or news sites.
There are ICO review websites, and they're getting better and better.
But the ICO review websites are paid to promote the ICOs.
I mean, yeah, I'm sure there are a couple that have no. At the same, that's
Sorry,
how the banking
which one is
crisis
this?
started as well, with the rating agencies that were not rating the institutions properly either, right? So history repeats itself now in the ICO space.
It's a lot faster in the ICO
It is a lot
space.
faster, yeah.
Well, I can share my personal experience. Is there a bubble? Yes, absolutely. But we're benefiting from that right now. A company I incubated just 3 months ago did their pre-ICO in China, raised over $30 million within a week, partly because our names were there. And right now, as of right now, literally a few minutes ago, I still received a message from WeChat from Chinese investors who didn't get in. They were mad at me. And I mean, I'm talking about tens of millions of dollars. Couldn't get in.
That's part of the problem with the ICO process, because in many token sales, it's a time schedule with a very high reward to act quickly, which creates this FOMO effect.
Dopamine.
Yeah, which just makes it a feeding frenzy of people trying to get in to the next token sale. It's crazy. What do you think about it?
I think right now, as far as you can see, the investments are only growing. Yeah, every month, 2 months, it's like constant. In December, it was 1.2 billion raised through ICO. Yeah, and I think moving towards the first kind of phase, whenever we'll see a huge decrease, is like I think it will be during the summer, whenever the first products will face non-delivery. Yeah, because people who raised imagine that there's like the big raise started from summer 2017, yeah, kinda. And then you need like, whatever, 8, 12, 14 months to deliver the product. But basically most of those people won't deliver the product. And then whenever people will just see it, I think that will be the first kind of decline in the hype in general in investments.
Isn't everyone incentivized to not deliver the product? Because as soon as they delivered it, they'd be able to be measured on their success. So there's an interest for them to actually never deliver.
The problem is there are huge upsides on the ICO, and everybody needs to understand that. Opening the bank account, just try to open bank account. It's easy, yeah, like if you're opening for a natural business, but for crypto, like it's a challenge. Try to get mass adoption for your token if it's like infrastructure platform. Hey, people not get used to it. One of the game developers, the CEO of big game development studio, has been trying to open account. We've been discussing partnership, and he's been trying to open. He's a US citizen, and he's trying to open bank account on Polonix. It took him like 1 day, and still didn't get it. So, and he's tech savvy, yeah. So, like, I mean, there are a huge downsides for the people who are conducting ICO, which are not on the top right now. Yeah, nobody can see. Not all of those can see.
Any other comments on that?
Yeah. So, what makes me a bit uncomfortable with ICOs at the moment is basically the model that they use is broken, because actually, usually with VCs and conventional VCs, they invest in a company because they see not only the potential, but also what the company has delivered. And so, for example, they expect some traction or an MVP or something that is tangible, that is a tangible evidence that actually that would prove the ability for the team to deliver. With ICOs at the moment, it's not the case at all. Like basically, the investor, they just read quickly like a business white paper like of 2 pages. Like the project sounds reasonable, sounds legit. Okay, they just send the money. Like basically, then like the founders, they get the money. What's their incentives? Like if you raise 10 million or 20 million US dollars,
or 100 or a billion.
What is your incentive to deliver?
But what we are seeing is that vesting as you have in the startup world, where you have to vest for a certain amount of years, is now being programmed into the smart contract. So effectively, you can build those mechanisms in. It's just not yet at that level of sophistication, and it's a money grab where people are just doing the easy model because nobody's punishing them for not doing so.
Right.
But it's changing. It's like it's quickly moving into more sophisticated market
We'd
environment.
like it to change. I don't think it's changed. There's no evidence that it's changing yet. But
Yeah, well, when I look at the pre-sale deals, investors get locked up for a couple of years. They get all of these things are happening behind the scenes. Maybe not, to the average retail investor. They're getting they're spammed with the Facebook ads. Invest in this next crazy ICO where they're already late to the party. But I mean, and then of course, the bad players and they're good players, but it's evolving, and the bad ones will be weeded out, and the good ones will remain.
How are they going to be weeded out? Because no one has an incentive
when they fail to
change
deliver.
this.
When they fail to deliver, people will move the money to the projects that actually do the things like they're supposed to be doing. So the money will naturally flow to where the good projects are delivering.
And you see that now, actually, like compared with last summer, the amount of investment for each ICOs is much more reasonable than it used to be.
Yeah,
So-
but there's
so
like
basically
100
there is
times the
more
ICOs now each month. There's so many now that the money's just divided by a larger number of ICOs.
Actually, in China, I just came from China 2 days ago, and the hype is actually stronger than the last summer. It is really strong. I've been chased by money, and I'm refusing tens of millions of dollars. It's just literally, and people are saying I'm crazy. Maybe I am, but I do believe the ICO, the new way of a blockchain-based fundraising is the future. Except I don't call ICO initial coin offer. Our own ICO I call the interactive cryptocurrency offering. Because
Officially, no one's allowed to use the word ICO anyway. The lawyers will absolutely kill you if you use the word ICO. It's token sale or token generation event, if you want to be very legal about it.
Right now, it doesn't matter. Token sale, ICO, how you call it, SEC, like enforce everything, so it doesn't matter how you call it, it matter what are you doing, security or utility token, that's it.
So this is a new thing. It's going through the phase, the crazy frenzy phase, and afterwards it's going to have more and more regulations, and it's going to have a more rationale. So that's what we believe.
But the regulators are being very slow to actually give guidance. The SEC is actually one of the more helpful ones, is actually saying things that are wrong. But most regulators are not guiding people and are just letting it be a free-for-all. What do you think about that?
Well, I feel strongly about it. That is why our own token sale, we try to make sure we do that legally within the existing framework. Right now, we're doing that in the US under Regulation D, but meanwhile, in a major European country, as of right now, because we're going to announce that tomorrow, we're doing a prospectus filing ICO. It's going to be something new, cumbersome, not efficient, but somebody got to do it. And in the future, the regulators will hopefully upgrade their regulatory framework. Everything will be smoother and more controlled way in that. Yeah.
Are you issuing, just one question, sure. Are you issuing security token?
Yes. Yes, security token, because in my mind, 95% of the tokens are security tokens. Utility token is just an excuse.
Yeah, obviously most token companies go out of their way to try not to be a security token and try to get the legal advice so that they can steer their world to not be a security token. But the ones that embrace being a security token have a much clearer path, and they can file exemption rules and offer it to accredited investors in America and so on.
But the problem is that, like, I've seen only one legal, I think, security token offerings was from Science Blockchain. Yeah, they've been trying to raise 100 million, but basically they raised 10, almost on the pre-sale, and on the sale, on the token sale, the crowd sale. People have no access because you need to, like, it's a pain in the ass. It's a screening that you need to like basically register, then pass the screening for security, like, and it's only for certain platforms how you can invest using third-party services. So it's on a token sale, whenever it's like utility, everybody can invest. Yeah, on the security, it's a little bit limited by amount of numbers of the investors on a token sale.
The main problem with it, with being a security versus a utility token, is the liquidity in the aftermarket, because currently the big exchanges are not interested in listing securities. They're not licensed for it, and they just don't want the liability for it. So they delist anyone that might be considered a security, even if they're not registered as a security.
Yeah, indeed.
Agreed. I mean, overall, the regulatory landscape has been evolving a little, but in Europe, for instance, there's been not much more action than, hey, watch out for ICOs. We sat around the table with the FCA and HMT in 2015 talking about, hey, can we open up bank accounts with Barclays? Then I sat around the table with the Swedish SFSA last year, and I actually literally had to explain them what an ICO is, which is, you know, they're being bombarded with PSD2, GDPR, and all these other regulations that they're also have to accommodate. And really, they're not fitted to, when we're talking about certain regulators, they're not fitted to catch up. I mean, even we in the space can hardly catch up what the new ICO model is and which one is better than the other one, and they're supposed to regulate it. It's tricky. It's still a wild, wild west, and I think it will be for at least 2018.
You raised a very valid question, the secondary market. But that's where I see the opportunity, the regulated exchange. So I just mentioned my first ICO investment. The total $38 million I'm investing is to build the first operational regulated exchange. Of course, T0 is trying to do the same thing, but without any experience.
And Gatecoin and presumably Fellow. And so I think there's a race for the exchanges to become regulated and to be able to list securities.
Absolutely right.
So one of the problems is, I mean, sorry, you mentioned that there are pluses and minuses to this whole ICO token model. And as I see it, the liquidity is the main advantage, instant liquidity, so that kind of de-risks it. Do you want us to do any questions, or do you want us to just keep going? Okay, spend them wisely. Okay, all right, go for it. Why not? Let's do a question. Okay.
You can have mine.
Okay, there we go. We got a microphone.
Hi there, thanks. Well, my background is I was an investment banker through the IPO internet bubble, and I remember feeling quite nauseous bringing some of those companies to market. And I feel 20,000 times more nauseous sitting here the last 2 days. I came here with an investor hat on, and I just feel quite ill, actually, watching this process. And I think people here are willfully blind about what's going to happen, because there's really asymmetric risk. Everyone in this room pretty much wants to use this ICO opportunity to raise capital. All the risk falls onto the people who invest, and 99% of these companies, I think, will fail. Not a single one has talked about how they will raise money, make money. And what will happen is then when they try to make more money, there will be no secondary round, and all these companies will become orphans. And then,
but they are all
and then
liquid.
everyone will start howling, and then the regulators will come down like a ton of bricks. And so I think, even watching the guy from Gibraltar, like, who controls what companies go on that market? You know, even though, you know, I was, you know, on the kind of traditional investing side, at least there was some control to what companies came to market, whether it be VC, whatever. Someone said, okay, this company can make money. This company can be on an exchange because actually there's something real. Here, there's nothing. There is nothing. And so who gets protected? And this is why this is actually 1,000 times worse. That's my opinion. And so I think everyone should be embracing regulation, embracing exchanges, because to be successful as an industry, to survive and thrive, it has to move beyond this instant grab mentality. It has to be sustainable. And if we don't, I don't understand how in a decentralized world you create some centralized structure. But if it doesn't, it will not survive. That's my overwhelming impression. So if you want to comment on that.
I totally agree with a lot of your points. But one of the de-risking things that tokens have is immediate liquidity, which actually, as a private equity investor,
It doesn't de-risk for the other side.
well, anyone that participates in a token sale will be able to sell their stake almost immediately afterwards, like literally the next day in most cases. So that's different than current private equity risk reward. But as I mentioned earlier, there's no independent analysis, there's no independent news sites. Most ICOs haven't built a prototype. They just write a white paper. You know, we used to say it's a white paper in a dream because most companies that put out white papers have no clue how to actually deliver on what they've claimed. And then once they get sent a shitload of money, then they'll hire the people that might have a clue how to actually build what they're claiming. But yeah, I think there should be some...
That's what you're saying.
No, I agree. I am highly critical of what's happened, that there's too much money being thrown at immature companies that have no idea how to manage their business, have no idea how to execute on their technology that they've claimed. No, this is a crazy situation where everyone is throwing money at highly immature companies. But I don't know how you regulate that.
Sorry, high risk, high reward. That's how you're basically hedging your risk.
Well, I agree with you. I think the time's up, but I totally agree with you.
Thank you, panel. Thank you very much, everyone. Okay.